This is a video about a unique trading indicator known as the Chandelier Exit Oscillator by LuxAlgo. It's designed to help you spot momentum shifts, trend direction, and even clear exit points without cluttering your chart. Instead of drawing endless lines or guessing where to place stops, this tool gives you a clean way to see where the market may be turning. We're going to go over what this indicator is, how to set it up, and I'll also show you 5 different ways you can use it in your trading. If you happen to find value in this video, don't forget to leave a like. To get started, you'll want to open up TradingView, which is the charting platform I'll be using. If you don't already have an account, you can sign up quickly through the link in the video description. Next, choose any market and time frame you want to analyze. Once your chart is open, click on Indicators, then type Chandelier Exit Oscillator in the search bar. Select the one provided by LuxAlgo and add it to your chart. Ladies and gentlemen, this is the Chandelier Exit Oscillator by LuxAlgo. In short, it takes the famous Chandelier Exit trailing stop system and reshapes it into an oscillator format, giving you a clear view of trend direction, momentum strength, and potential exit points. Instead of cluttering your chart with guesswork lines, this tool demands proof from volatility before plotting its signals. So, what exactly are you seeing? At the bottom of your chart, the oscillator plots bars that flip between bullish and bearish states. Blue bars above zero represent bullish momentum, while red bars below zero represent bearish momentum. The higher or lower the bar, the stronger the momentum in that direction. On your price chart, you can also activate the overlay option. Here, you'll see green trailing lines acting as support in an uptrend, and red trailing lines acting as resistance in a downtrend. These dynamic levels trail price using the average true range, so they adapt to volatility. If price crosses one of these lines, it often signals the current trend is weakening or reversing. You can also choose between regular and normalized modes. Regular shows raw oscillator values, while normalized smooths them out and rescales them between 0 and 100 for easier reading across different markets. And don't miss the trend-based bar coloring. With this option, your candles will automatically shift color depending on trend direction, making it easy to see at a glance whether you should be thinking long or short. In simple terms, this indicator turns complex trailing stop logic into a clean, visual tool. It not only shows where to protect your trades, but also when momentum is shifting, giving you a real-time map of market behavior. The easiest way to start using this indicator is as a trade exit system. If you're already in a trade, the oscillator gives you a dynamic trailing stop. Here's how it works. In a long trade, the indicator plots a green line below price. That's your trailing stop. As long as price stays above the line, you stay in the trade. The moment price closes below the line, that's your signal to exit. In a short trade, you'll see a red line above price. That's your stop. As long as price remains below it, you hold the trade. If price closes above the line, you get out. The big advantage is that this stop isn't fixed. It moves as the market moves because it's calculated using the average true range. That means the stop widens when volatility is high and tightens when the market is calm. This keeps you from being kicked out by random small pullbacks. Many traders struggle with exits, either cutting profits too early or holding too long. The Chandelier Exit gives you a clear mechanical rule. Follow the line, and when it breaks, you're done. The second way to use this tool is to help you stay in a trend with more confidence. One of the hardest things for traders is holding on to a winning trade. Fear often makes you close too early, but the oscillator gives you an extra layer of reassurance. When the oscillator bars are blue and above zero, it means buyers are in control. As long as you see that, it's safe to hold your long trade. For example, imagine you're long, the price pulls back a little, and you're tempted to close, but the oscillator is still printing strong blue bars above zero. That tells you the trend hasn't changed. A few candles later, price pushes higher, and your target gets hit. When the oscillator bars are red and below zero, it means sellers are in control. As long as that signal stays, you can confidently hold your short trade. This way, you avoid second-guessing yourself. The oscillator is basically a trend health meter. As long as the reading stays on your side, you know the move is still alive. The third method is to use the overlay lines for breakout trades. For a buy trade, watch for price to break above the red trailing line. If a candle closes firmly above it and the oscillator flips blue above zero, that's your breakout signal. Enter the trade at the close. Place your stop just below the last swing low and target a 1 to 1.5 risk-to-reward ratio. If you allow this trade to run, you will see that it easily reaches your profit targets. For a sell trade, look for price to close below the green trailing line. If the oscillator also flips red, that's your short breakout signal. Enter on the close, place your stop above the swing high, and target 1 to 1.5 risk to reward. If you allow this trade to run, you will see that it easily reaches your profit targets. The fourth method is to use the overlay lines for break and retest trades. For a buy setup, wait for price to break clearly above the red trailing line. That breakout shows buyers are taking control. Once a candle closes above the line and the oscillator flips blue above zero, the bias is confirmed. After the breakout, let price pull back to retest that same green line, which now acts as new support. When you see a bullish rejection candle there, enter your buy trade. Place your stop just below the retest candle's low and set your take profit target at a 1 to 1.5 risk-to-reward ratio. If you allow this trade to run, you will see that it easily reaches your profit targets. For a sell setup, do the exact opposite. Wait for price to break cleanly below the green trailing line. That break shows sellers are in control. Once a candle closes below the line and the oscillator flips red, let price pull back to retest the same red line, now acting as resistance. When a bearish rejection candle appears, enter your sell trade. Place your stop just above the retest candle's high and set your target at a 1 to 1.5 risk-to-reward ratio. If you allow this trade to run, you will see that it easily reaches your profit targets. The fifth way to trade with this indicator is by using the multi-timeframe setting. All you need to do is make the oscillator calculate based on a higher time frame while you trade on a lower one. For example, let's say you're on the 1-hour chart. Open the indicator settings. Find the time frame option and change it from chart to 4-hour. Click OK. Now while you're viewing the 1-hour chart, the indicator is actually calculating its signals from the 4-hour time frame. For a buy trade, watch for price to break above the red trailing line. If a candle closes firmly above it and the oscillator flips blue above zero, that's your breakout signal. Enter the trade at the close. Place your stop just below the last swing low and target a 1 to 1.5 risk-to-reward ratio. If you allow this trade to run, you will see that it easily reaches your profit targets. For a sell trade, look for price to close below the green trailing line. If the oscillator also flips red, that's your short breakout signal. Enter on the close, place your stop above the swing high, and target 1 to 1.5 risk to reward. If you allow this trade to run, you will see that it easily reaches your profit targets. In summary, the Chandelier Exit Oscillator takes the guesswork out of trade management by combining average true range-based trailing stops with a momentum oscillator. It gives you dynamic green and red levels to guide exits, shows you when momentum is strong or fading, and even lets you filter trades using multi-timeframe signals. Instead of cluttering your chart with subjective lines, it delivers adaptive levels and clear signals you can actually work with. Remember, this is not financial advice, not investment advice, not trading advice. We're simply exploring how tools function so you can decide whether they fit your own approach. Always do your own research and make sure you fully understand the risks before trading live. If you learned something today, leave a like to support the channel. And if you want to keep discovering more useful tools like this one, consider subscribing so you don't miss the next video. Thanks for watching, and I'll see you in the next video.
you.